Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of May 20th through May 24th, where we'll try to help you make money trading during the return of the meme stocks. We'll talk about various strategies, trade ideas, again, how to make money trading during the return of the meme stocks, etc. Thank you all for joining us in the live chat today. Gabe Fade, MD, yes. Ricky Khan's off celebrating the college graduation of several of his kids. So congratulations again to Gabe and his kids for their graduation and to all the others who are graduating. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of May 20th through May 24th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our Google documents with our notes contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trade strategies, trade ideas for this trading week. We store all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes, and you can find the direct links to both this Google document and the Google Drive folder in the description box below. Welcome Walter Lyons, Gerald Fitz, Easy Mike. Thank you all for joining us in the chat today. Hope you all had a great trading week and are doing well. So first we'll see how the markets ended up on Friday, the main page in FinViz. So we see really the markets were pretty much just choppy flat on Friday, just kind of oscillated around the midpoint. The Dow did end up in a record high over 40,000 with an increase of about 0.34%. NASDAQ just slightly negative, 0.07%, and the S&P just slightly positive, but over 5,300, up 0.12%. Pretty split between advancers and decliners. Again, just pretty balanced. We had 52% advancing, 44% declining. We had almost 87% new highs, only 13% new lows. Got 70% above their 50-day moving average, 30% below. Got 70% above their 200-day moving average and 30% below. So again, pretty split, shows as bearish towards the end of the day, but again, pretty flat throughout the day. Again, Friday was May options expiration day, OPEX for May. So that might have accounted for some of the tug of war, pull back and forth on the markets on Friday. So we see most of the Mag 7s ended up pretty flat. NVIDIA corrected, retraced a little bit. We'll talk about the upcoming NVIDIA earnings. So we had some of the semiconductors slightly negative. Microsoft, Apple pretty flat. Amazon, Tesla slightly positive. Most of the sectors pretty mixed. Had Google up, Meta down. Some of the news. Apple's lost its shine. How can it regain its luster? Stickiest part of inflation is still sticky. Stock markets are on record hitting a spree around the world. So also foreign markets will see the Euro stocks, the DAX, etc. The Nikkei. Dow closed above 40,000 for the first time. Record high on the Dow, 5-week winning streak on the Dow. So we'll see, as we talked about, it seems in general the melt up continues. Oil had been slightly over 80, I believe, and now it's just below 80 again, although, again, retesting that 80 resistance point. Natural gas has been on a steady uptrend, now above 250 at 264. We'll see a real upsurgence in both gold, but particularly silver on Friday. Not sure what the driver behind the spike in silver was, whether that is related to the return of the meme stocks and or some other macro considerations. See the futures, Dow pointing positive, S&P positive. NASDAQ slightly negative, Russell slightly negative. It looks like they added the Russell recently to this page. Yen's been, we'll see. I don't know if there was some BOJ intervention, a slight intervention. We saw a little bit of a pop up and then a quick correction back down. Treasuries did pop up a little bit on Friday, but in general, the treasuries were down for the week. We can see now the 30 years back around 4.5, 5-year about 4.4. Got a slight inversion with the 10 down below 4.4. Look at the major indices. Again, you can find these screeners and also in the screeners tab in both of our ETFs and Watchlist Google Sheets. So again, we see the Dow broke out far above its moving average, new record high. Again, pretty positive melt up. It's got an upwardly trending channel. It's kind of in the middle of that channel. So again, looks like a pretty good upward trend on the Dow. Russell's a little bit weaker, hasn't quite broken its previous high. So we've got that resistance line at the top there. And again, we'll probably see the catch-up trade in the IWM and the Russell 2000. Probably test that resistance point, test that high. Got support from the moving average. So again, some catch-up trade in the Russell. Again, we see that breakout of the Qs, broke out of that multiple top, nice strong breakout. So it looks like it corrected just slightly. So we might see a correction back down to that multiple top, but again, upwardly trending channel, moving average now trending upward. So again, continue to see a potential melt up in the Qs. Similarly in the SPY, again, upwardly trending channel, broke out of that previous high, slight correction. So we might see a bounce, a retest of that previous high, and then again, trending upward, continuing to melt up. So if we look at the breakdown of the technology components, so you can see ARC really still is not participating like the rest of the technology sectors, just kind of oscillating pretty flat, chopping back and forth. It's sitting around that longer term moving average, got resistance from the shorter term moving average. So again, ARC not participating as much. See that breakout and then a slight correction in the FANG U's. So we'll see if it breaks down below that. We'll talk about this in more detail probably tomorrow. But I think a lot of that will be driven by the NVIDIA earnings. Again, biotech not participating as much. It did briefly break above that moving average, corrected back down, and now it's kind of oscillating around that shorter term moving average. Got support from the longer term moving average. Semiconductors broke out and then slightly corrected. Again, it hasn't quite made it up to that previous high or the all-time high previously. And again, I think that's going to depend mostly on NVIDIA earnings. Again, we'll talk about that. NVIDIA comes out and beats and guides higher again in earnings. I think we'll see a surge in the SOXL. TQQQ, similar to NASDAQ, broke out of that multiple top, corrected back down. It's got support there, so we'll see if we get a bounce or further correction back down in the TQQQ. And the broader technology a little bit weaker, so it did briefly break out of that multiple top, but then corrected back down below. So I think we'll see some more correction in the broader technology market. So let me grab a quick drink and we'll go over the groups and sectors and industries. Welcome, Ellen Krantz. Thank you for joining us. Hope you're doing well. Okay, if we look at the groups, the sectors from Friday, again, this was a interesting sector rotation. Basic materials had been lagging, and then we see the strong sector rotation back into energy and basic materials. Again, both energy and basic materials have been lagging. So this was an example of sector rotation from the laggards to the leaders. Again, we'll see silver, gold, copper, uranium all surged on Friday. See technology and utilities, which were some of the leaders, again, uh, rotated out of technology and utilities into basic materials, energy. Also, as Easy Mike was pointing out, back into financials. So again, interesting sector rotation on Friday. Strongest for the week, technology, communication services, real estate, basic materials. Again, the weakest energy, and we're getting a slight correction in industrials. They had been running strong for quite some time, as we'll see. So for the month, the strongest were utilities, real estate, technology. So again, we see slight rotation out of utilities, out of technology into the laggards, which were basic materials, energy. Industrials had been quite strong for quite a while. So again, we'll see that sector rotation now that we're near the all-time highs. Again, I think the name of the game is to watch that sector rotation and look at the breakdown of the industries. Again, mostly basic materials: silver, uranium, copper, gold, miners, precious metals, aluminum. Then we've got energy, oil, coal, all strong on Friday. Some of the REITs a little bit stronger. Weakest sectors is a mixture of retail, some REITs, some utilities. For the week, again, basic materials, some energy, oil, solar bounce back and forth. Coal pretty strong. The weakest, again, a mixture, some building, broadcasting, trucking. So again, not a whole lot of weakness, isolated to particular industries. For the month, again, basic materials been pretty strong. Utilities were strong. Some of the REITs. And coal had a recovery. Steel's been oscillating a little bit, not as strong as some of the other basic materials. Okay, so we'll go over some of the highlights from the economic data from last week, look at some of the upcoming economic data for next week, go over some of my comments on the highlights, and also just a reminder, as soon as this economic data, the important economic data comes out, I try to capture it, usually from investing.com and or FinBiz, and post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord's free to join, so we would love to have you participate in our Discord. And again, I try to capture that data and post it in the Surf the Markets channel in our Discord, so you can see a screenshot of the data from investing.com, the raw data, also any important news that comes out. I'll post that as quickly as possible in the Surf the Markets channel in our Discord. So again, great way to get real-time economic data is by joining and participating in our Discord. So last week, not a whole lot. Monday, Tuesday, we got PPI data, producer price index, inflationary data, and it was a little hotter than expected. So the core PPI was 0.5 versus expected at 0.2. Month on month, year on year is pretty flat. But again, hotter than expected on the front end of the inflation curve. Also, we had Powell was giving a speech on Tuesday, so I captured some of the notes that came out of Powell's discussion. Says he wouldn't call the PPI reading hot, but sort of mixed. Restrictive policy may take longer than expected to bring inflation down. So again, higher for longer, may take longer to get inflation to come down. Don't think it's likely the next move will be a rate hike. So very low probability that they would do any further rate hikes. I think that's pretty much off the table. Lending activities by non-banks are growing very, very fast, and he expressed some concern with that. So that was interesting that may be a place where we see some issues, some weakness in the economy, non-bank lending. Then Wednesday, we got CPI data and retail sales data. We also got mortgage rates went down a little bit as bond yields had gone down. Mortgage market picked up a little bit, and we got CPI data. CPI data was a little bit lighter than expected. So the consumer price index a little bit lighter than expected. So the market like that shows inflation is very slowly coming down, although again it was only 0.3 versus 0.4 expected. Year on year still 3.4, so still well above their 2% target. Retail sales came in a little weaker. It was expected to be positive 0.4, came in flat, and gas and autos was actually negative, so possibly some pulling back from the consumer. But again, very slight. Again, markets in general received both these. Even though the PPI data was a little hot, the market really didn't react negatively. As we'll see, however, in the futures of the commodities, we talked about, silver, gold, etc. We'll see a number of the other commodity prices are very high, and I expect that to work its way into future PPI numbers. So the PPI may continue to be hot, and in time, those producer prices again get passed on to consumers. So again, even though we had a slightly lower CPI measure in April, I think those higher commodity prices might cause it to be stagnant. We've talked about smoldering inflation, and I don't think CPI is going to continue to come down, and that's going to keep the Fed on hold, higher for longer. I don't think they're going to cut anytime soon, given that inflation outlook. Also, we'll see the employment data. So Thursday, we got jobless claims data. So we'll look at that first. Initial claims is slightly higher than expected, but slightly down from the previous month. The 4-week average just creeped up just a little bit, and continuing claims were just slightly above expectations. But again, we continue to see, the job market continues to be relatively resilient, not seeing a dramatic change in initial claims or continuing. So again, people are still able to find jobs. It's just, slightly weakening over time. Also, we got building permits were down, but less than previously. So again, mortgage rates came down a little bit. Some building picked up a little bit. Manufacturing index, again, manufacturing is slowing down, so it was weaker than expected. Again, Friday was options expiration day. So let me grab a quick drink and we'll go over the rest of the economic data from last week and then look at the upcoming economic data for next week. Okay, again, we've got Fed officials speaking, causing slight volatility around when they expect to cut, how many cuts, etc. Some, I think, Mester even said she was still open to a hike, although Powell, as you can hear, is pretty much discounting any hikes. Bond auctions a little bit weak. Talked about PPI data. Talked about the Powell speech. Talked about mortgages and CPI and retail sales. Crude oil inventories dropped more than expected, but again, the price has stayed pretty much below 80. Gasoline inventories down a bit. Talked about building permits and jobless claims. Natural gas storage was up, but less than expected. Again, we've seen a pretty steady upward trend in natural gas prices. Baker Hughes count, so the rig count went up just slightly, so not a whole lot of change. So again, I would expect oil prices, unless something happens in the Middle East, to be pretty stable right now. Again, resistance at 80. Economic data for next week. So we've got, again, Powell was supposed to talk. I heard he came down with the virus, so I guess I don't know if he's going to be talking virtually or not. Again, we've got other Fed officials talking. So again, some slight volatility. Chair Yellen. Get the Red Book, not a whole lot of impact. Mortgage data, existing homes, etc. Building permits, and then jobless claims data on Thursday. Natural gas storage, etc. Fed balance sheet. Durable goods, etc. Then we get Michigan sentiment on Friday, so not a whole lot. Last week was the heavy economic data week. This week, again, I think is going to be focused around the NVIDIA earnings, which is on Wednesday. So again, I think a lot of what happens, particularly in the technology sector, but potentially due to the size of NVIDIA and the reaction that could occur, a lot of it's going to depend on the NVIDIA earnings. Now, again, they've had a tendency to beat and raise, and I think that's what's expected. If they disappoint in any regard, I think you could get a very negative reaction in NVIDIA, as well as the other semiconductor stocks, the other AI-related stocks. If they do come out and beat and raise, as it has been their tendency, again, I think you could get a resurgence of the AI FOMO in the semiconductors and the FANGs, etc. So again, I think a lot of, particularly the technology sector, is going to revolve around NVIDIA earnings, and I expect a lot of people are going to be waiting for that. You can also see the rest of the earnings calendar in investing.com. Palo Alto Network. So again, you can go over the whole list. All the Mag 7s pretty much have reported. There's other technologies, energy, there's Zoom, etc., Nordstrom Retail. So we'll get a mixture of other stocks. And again, you see the reactions not only to earnings, but also to guidance. And again, you can hear how we trade around earnings in our video about how to make money trading when earnings matter, and earnings definitely matter, and it's not even just their guidance, but what are the market's expectations. And a lot of these, particularly the technology companies, the expectations are very high. So if they don't meet those lofty expectations, again, then they could get punished pretty quickly and pretty dramatically. So again, keep an eye on the earnings calendar and how that might affect stocks you're watching in the same sector. Sympathy plays, there's a 3D printer, etc. So you can go over this whole list. And again, a lot of this is going to revolve this week about NVIDIA. That's what most people are talking about. So I hope that all helps. Again, the next FOMC meeting is in June, 11-12, and we'll get a new dot plot, new SEP. Again, we'll have a better idea of if they cut back their number of cuts, how soon they'll cut, etc. So let me grab a quick drink, and we will look at the market screen in Weeble as well. Just a quick reminder, if you're not already using Weeble, you can still get 75 free fractional shares of stock by opening and funding your account with 25K or more. Less than 25K, you can get 20 free fractional shares of stock. They're also, I saw a note, they're also offering I think a 1.25% match on transfers of assets. So again, they're competing with Robinhood, etc. So they have a number of other offerings. I think they extended their 3.5% match for contributions into IRAs as well for another month. So again, lots of benefits if you're not already using Weeble. We use it for our market analysis, our due diligence, the majority of our trading. And if you'd please use our affiliate link in the description box below, we'd appreciate it. You can get your free stocks and all the other bonuses and help support our BeachBum trading community, which we greatly appreciate. So here's the market screen of the online browser version of Weeble. Here's our histogram of advancers and decliners for Friday. So again, we can just see that kind of tug of war back and forth, pretty balanced between advancers and decliners, not a whole lot of movement. Again, kind of a tug of war on Friday. This is kind of interesting. We see the typical inflow early in the day in the NYSE on Friday, but we had an inflow in the NASDAQ up until the very end of the day. So that, again, was kind of interesting. We've typically seen outflows out of the NASDAQ previously on Friday, so we did get an inflow in the NASDAQ on Friday, so I thought that was interesting. Again, quick reminder, you can also see the near-term earnings calendar here in the calendar section in Weeble, so you can see what's upcoming. What time, whether they now got the release time in there, and also estimates. So let's look at the best performing industries for the week. So again, basic materials, metals and mining, uranium, some office equipment, food and drug retailing, financials, semiconductors, slightly positive, biotech's pretty split, software, IT services, REITs. So again, we're starting to see a recovery in the REITs. Again, we saw the 10-year bond yield go down a little bit, mortgage rates go down a little bit, so a little bit of bump up in the REITs, real estate operations, renewable energy, solar kind of oscillated, paper products, banking, some communications. Let's look at the ETFs, and then we'll look at the ETFs in detail in a minute. So that's India. I think that's another emerging market. Dow up. Cyber long the S&P, short NASDAQ. That's interesting. So again, might see a correction in the NASDAQ, short on the NASDAQ. That's long on the yen, short on the VIX. We saw the VIX actually drop below 12. So again, no fear in the market right now. Again, up on the Russell. EPV is short on the Euro stocks, and that went down. So nickel, commodities, nickel, copper, uranium. Healthcare, slightly, mostly negative. Financials, positive. Utilities, pretty split. Communications services, split. Energy, pretty positive. Real estate, pretty mixed, but slightly positive. So again, rotation on the defensives, pretty much, risk on with the return of the meme stocks, etc. You saw a definite risk on bent all week. Again, basic materials, pretty positive. Technology, mostly negative. Commodities, mostly basic materials, I'm sure. We'll look at all the foreign currencies and the futures in a second. Okay, let's look at the futures. And just a quick reminder that Weeble's now offering future trading, and you can get the details of their future trading offer via the link to the details in our Discord. So again, now you can also trade futures in Weeble. I do not currently trade futures directly, except through ETFs currently. So if we look at the future charts, again, we see the Dow. Now the futures in the Dow haven't quite broken to a new high. So we'll probably see a testing of that high, but you see that very positive run. Same way with the S&P. Look like it. The futures of the S&P did break slightly above its high. Slight correction. We'll see if that holds support and it continues this upward trend. Same thing with the NASDAQ, although it did roll over a little bit. It did break out previous high. So again, we'll see if it holds that support and continues the upward trend melt up. Again, Russell's got more room to run. Looks like it got support at that previous high. We'll see if that holds and it tests the next high. Nikkei's been, it kind of muted. It kind of bottomed and bounced. Now it's pretty much flat. Looks like Euro stocks topped out and rolled over. Again, we'll talk about this and some ETFs to trade the Euro stocks again tomorrow. Same way with the DAX. So they made new highs. And then it looks like there's a slight correction there. And we saw the VIX drops. Last I saw it was under 12. Oil's been pretty flat, below 80. So again, 80 is kind of a resistance point. 75 or so is support. Again, natural gas on a pretty strong upward trend, so steady upward trend. So again, we'll look at the ETFs. Boyle is the long on natural gas. Again, we saw that pop in gold back up over 2,400, so a nice strong surge over that resistance point of 2,400. Gold didn't quite test its previous high, so we might see a test of that previous high in gold, but silver really went nuts on Friday, so you see it got that support at 30. It had a doji candle before that, so it looked like, which was right below that 30, and previous had multiple rejections at 30, and rather than that, it surged up to almost 32. So we'll see if we get a correction. That was a pretty strong, exuberant move. See if we get a correction or if we get a continue exuberant surge in silver. So platinum running up high. Palladium, not so much. Copper, again, very strong. So all your basic materials are running high. And again, my comment previously on the cost of these input basic materials are going to eventually feed into PPI prices. Same way we see most of the grains. So corn's relatively high. Oats was high. It's come down. Soybeans, wheat started to come down. But again, all the food products are also high. So eventually, I think they're going to feed into producer inflation, which eventually will trickle to consumer inflation. Although, a lot of companies are being punished for raising producer prices, so they probably can't continue to raise prices. They'll probably have to cut their package sizes again, what they call shrinkflation. And or eat the cost, which will cut into their margins. So again, we saw bonds had run up. You see it, and they tested kind of the recent high and then retraced. Now these are starting to look like cup and handle type moves, so we might see a bounce back up on all the bond prices, which would be a decrease in bond yields. So the dollar pretty much rolled over. It's now sitting oscillating around 104. So a number of the foreign currencies caught a bid up. Euro, Aussie dollar, New Zealand dollar, Canadian dollar, pound, etc. The laggards are the yen and the Swiss franc. And again, I don't know if this was another slight BOJ intervention. So we saw a little bit of a pop and then a quick correction back down. So again, we might hear that maybe that was a slight BOJ intervention, and maybe they're holding that level as a floor in the yen. So again, we'll see if that continues to hold and if we continue to get these slight pops on BOJ intervention. So I hope that all helps. Okay, I'll open up our ETFs Google Sheet. So if anybody has a particular category, commodity, topic, etc., index you want to look at ETFs for, please throw those up in the chat. Otherwise, I'll just quickly spin through some, point some out. Let me grab a drink a second. Welcome, Logan Flips. Thank you for joining us. Hope you're doing well. On the topic of ETFs and meme stocks, we're talking our theme is return to the meme stocks. At one time, I believe there was an ETF on meme stocks. I think it was MEME, so meme. But I think they discontinued that before the return of the meme stocks, as I think it just didn't get the level of interest. So as far as I know, there isn't one on meme stocks anymore. If anyone knows of a new one, or if they resurrect that meme stock ETF, please let us know. Again, lack of interest. They discontinued it before we got the return of the meme stocks. So just quickly, we've got all the different technology component ETFs, the long or short, ARK, or SARK, LabU, LabD, etc. Got Bitcoin ETFs, etc. We did see, looks like China's swinging back up. Got some positive earnings, I think, from JD, Baidu, etc. So yen is the long on China. When we get a correction, yang. Again, a number of our BeachBum traders short-term trades China, etc. Using those. Again, short-term trading, I think, is the name of the game as we chop along the top the markets. Talked about we have a number of emerging markets. If you're looking for emerging markets, energy. So we talked about Europe. So we'll look at EPV, which is the short, leverage short on Europe again tomorrow. The long on the FTSE Europe is EURL. So if you're watching the top on the EURL, looking for an entry in the short EPV, we did see that slight rollover and correction. Again, the FANGs we saw broke out slightly, coming back down, so possibly a short in the FANGs. But again, the NVIDIA, in my humble opinion, I think the NVIDIA earnings are going to be the driver for a lot of the FANG stocks, a lot of technology. So again, I'm hesitant until we get those NVIDIA earnings. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for education and hopefully some minor entertainment purposes only. Trading gold, we saw it break out in gold. So short-term, trading. JDXU is the leverage long on gold. JDXD is the short, as well as DUST or DZZ. Again, these are on the gold miners, so they're not directly correlated. They're indirectly correlated with the price of gold, but not directly, and have a tendency to lag. So we'll see also silver. The long is AGQ. So if you happen to catch that surge in silver with AGQ, it's the leverage long on silver. Leverage shorts are ZSL and SSG, and we'll be talking about ZSL again tomorrow. I've also got some on other miners, SILJ and an ETN, a monthly dividend payer on silver, SLVO. Again, they pointed out this high on silver, I think, goes all the way back to 2013. So this is a pretty exceptional high. We'll see if we get a correction. Oil, we talked about oil is pretty range bound, resistance at 90, long on oil, gush or UCO, short drip or SCO. We have the leveraged ETFs on NVIDIA. So if you want to try to trade the earnings or reaction to the earnings, you can pick the leveraged ETFs, again, NBDL, NBDS. I believe we also have a couple others in our research tab. So NBDD is a short. So again, you can do a find in our research tab as well. Find all the various ETFs that we've looked at for NVIDIA. So again, NBDD short, NBDQ short, NBDU long, NBDX long, and you can compare the risk reward profiles of all of those various ETFs if you again want to try to trade either around the earnings and or the reaction to earnings. You have to be nimble and again be careful. Semiconductors, again, these are probably going to react, significantly to the NVIDIA earnings. So SOXL long, SOXS short. So if you want to play, or SSG short. So if you want to play the semiconductor sector, you can also play the broader technology sector, TECS short, TECL long. So I hope that all helps. We talked about the yen. So again, the short on the yen is YCS. The long on the yen is YCL. So again, if you want to trade looking for that BOJ intervention, again, we're currently long YCL. Again, you can short-term trade those oscillations with YCS and YCL. Okay, if anybody else in the chat has any other ETFs you want to look at, if I missed your ticker or topic, I apologize, and please throw those back up in the chat. I'll leave this open and we can come back to it. In the meantime, I want to get to our topic for this week, which is talking about the return of the meme stocks. So let me grab a quick drink and we'll talk about our theme, our strategies for making money trading during the return of the meme stocks. Okay, our theme for this week is talking about the return of the meme stocks and how we can make money trading and or preserve our capital during the return of the meme stocks. I'm sure you're all aware, the apparent return of Roaring Kitty, who was the main influencer behind the original GameStop run in 2021, which propagated out to AMC, a whole number of other meme stocks. So, and we saw a big pop in GameStop, AMC, etc. Again, it propagated out to the previous meme stocks, Space, etc. I think BlackBerry, BB. I don't even know all the meme stocks. Again, just as a starting point, I don't participate. Anybody that knows my trading style, been around in our community, you can probably figure out that I don't trade the meme stocks. I'm not that nimble and pretty risk averse, so I don't even try to participate in that. And my biggest message, to all any traders, particularly new traders, who are getting excited about, this resurgence of the meme stocks, return to the meme stocks. Please don't get hurt. Don't blow up your account. Protect your profits. Again, my biggest concern is that people are going to, get hurt, blow up their accounts, not take their profits, and then as we saw with both GameStop, GME, and AMC, after their big pops, we saw quick retracements, and again, I don't want to see people get hurt. Let's run away from the stock market because they blew up their account in this return of the meme stocks, or this, irrational exuberance, in my humble opinion. So again, I'm concerned. I don't want to see new traders get hurt, get blown up. We want them to stay in the market, learn how they can make money trading consistently, such that they have a life skill and they can make money trading for the rest of their life from anywhere in the world. So again, that's my main concern. Again, I know there are seasoned traders who are very nimble, made good profits. I believe, I haven't seen the Crow today, but I believe he pointed out he made 200%. I think it was on GME, and then took the rest of the week off or so. So if you're seasoned, you know what you're doing, and you're careful, protect your profits. Yes, you can make money, and that's fine. I want people who have that ability to be able to make money using those types of trades to do so. And congratulations to you if you're able to do so. Just again, my message is don't get hurt, don't blow up, protect your profits. So I've highlighted a number of our previous videos on how you can protect your profits with stops. So how to use stops in E-Trade and Weeble, how to use stop loss and take profits in Weeble. Also, some lessons that I've learned with stop limit orders and using stops with low float stocks. So some of the meme stocks may be choppy, low float. And again, part of my message, as we saw, I think GME set a new record for halts, both up and down. And those halts, and then it can resume and gap right through your stop limit order, so it won't even trigger. So again, with some of these meme stocks and gappers, if they gap up and down, you may want to use stop loss orders instead of stop limit orders, so that if it does gap down or get halted and then resume below your stop, that it will be triggered. And again, you won't have more of a loss than you would expect. So again, I hope that all helps. And again, our goal is keep people safe and help them make money trading, help them succeed in their trading career. We want it to be a trading career, something that you can do, make money trading for the rest of your life, and not just, for a one-time shot, YOLO, you only live once time in this return of the meme stocks. So let me grab a quick drink and I'll talk about some of these other comments. So similarly, watch out for offerings. We saw both GME and AMC came out with offerings. AMC used a previously announced shelf offering, and then they use that money to pay down some of their debt. So again, any kind of offering is dilution. Typically, these companies, when they pop up like that, they're going to either leverage an existing shelf offering or drop a new one. And so I wanted to point out a couple ways that you can see those offerings. One way is their SEC filing. So if you're looking for, do they have an offering out there, a shelf offering, or are they announcing one? Some of the filing types you can look for are S1s, S3s, F1s, and F3s, but particularly a notice of effect. once they file for an offering, they have to have received a notice of effect that says they can actually use that offering. The idea of a shelf offering is something they file, and then for several years they can then decide to use that offering at any time over the next couple of years. So it's sometimes hard to find that they have one of these offerings out here, like the one AMC Leverage. So again, as soon as they drop that offering, chances are the price is going to drop. So it helps to be aware of if there's an outstanding offering or if they announce one. And these are several ways to find those offerings. I used to also in the news, either on the main page of FinViz or also in Weeble. If you look at the company news, the articles, and do a search for offering, search for effect, sometimes you can find those offerings. I used to have an automated news collector that then would look for these various SEC types and also offerings when we used to trade more penny stocks and biotechs. This becomes very important. Again, you want to know if they're going to drop an offering on you, as that's going to typically cause the price to drop. Similarly, if a stock is, below $1 or so, a couple dollars, you have to watch out. They could issue a reverse split, and then they could re-offer, resell that same stock. So they could reverse split it 1 for 10 and then resell the other 90% of the stock. So we did do a previous video on how the automated systems I use to collect the data to find non-compliant companies that are at risk of reverse splits. So you can listen to that video and see how you can identify companies that are at risk of this type of reverse split and reoffering of stock. And we've seen a number of these penny stocks reverse splitting and reoffering stock as they can't really get they can't afford to get more debt, and they possibly can't do another direct offering. Be poorly received, but they can try this reverse split and reselling their shares. Some of these companies are notorious, and you could end up getting reverse split. Your stocks can get reverse split into oblivion, and you can end up with no shares in that way. So be aware of those that are notorious for that. Now, in Weeble, you can also see in the main chart a S symbol for their recent splits. Last thing I wanted to go over just very quickly on the topic of the return of the meme stocks is if you are interested in and have the skills to try to make money trading these types of stocks, typically it seems like they're looking for stocks that have a high short interest. I guess Big Lots got a bid. I think Gerald Pitts, hopefully you made some money on your Big Lots position. Again, be careful, protect your profits, etc. But it had a high short interest. Again, this has nothing to do with fundamentals, etc. This is purely looking for opportunities for this type of meme stock, short squeeze potential. So I created this filter, this screener in FinViz. You can access it via the links in the notes, and then we'll talk about refining this filter. So in the descriptive section in FinViz, you can see the float short. So I just happened to pick 20%, which is going to give us, the highest short interest. You can see it's identified 168 stocks that have a short interest over 20%. So again, plenty of potential candidates. Then you can refine this down. My preference would be, profitable stocks. So if you go to fundamentals, find a PE over 0. And then we've got, okay, here's stocks that are actually profitable and have a very high short interest. Here's another one. I think that, you see it had a little bit of a squeeze. It looks like Thursday, Friday. So again, pretty good screen. There's GME, etc., Carvana. So again, you can use these screeners to find potential candidates. Again, not saying all of these will squeeze, but if you're looking for the ones that the memesters are looking for to try to squeeze, then you can use these various criteria. Again, then you can filter it down further with whatever industries, etc. But my humble opinion, I thought those were pretty good. Short interest over 20%, profitable. You could even say, okay, trading under cash. So we've even got a couple that are trading under cash. Aurora Cannabis, I don't think they're actually profitable. It's showing a positive PE. I don't think Aurora is actually profitable. Showing Hertz, again, another potential. So I hope that helps. Again, if you want to try to trade those types of short squeeze candidates, again, be careful. Don't blow up. Protect your profits. But again, if you can make money in that fashion, that's good for you. So I hope that all helps. Again, you can access our previous discussions on making money trading in May, making money trading in the spring. Again, we talked it's going to, continue to be sector rotation. We saw that rotation on Friday from laggards to leaders. So there's multiple ways to see that sector rotation. And again, I think we'll probably see that up until, at least we get the answer from NVIDIA. And again, I think that'll have a dramatic impact on the markets one way or the other. So I hope that all helps. Tomorrow we'll also talk about additional ways to make money trading, including using dividend payers and various option strategies. Again, and we'll talk in more detail about taking advantage of some of these ideas with individual stocks to put on our top swing trading stocks to watch list. So again, thank you for everyone who joined us in the live chat today. And thank you to everyone who's watching after the fact. We hope you'll like this content. We hope you'll smash the like button. Help us try to get the YouTube algorithm to give us some love, share our content with other traders around the world. We'd greatly appreciate it if you would directly share our content with your fellow traders and friends. Again, if there are new people, particularly, I'd love to know how to reach more of the new traders. Also, people that are would like to swing trade while they're working a job, etc. So if you'd help us get the word out, have them join our community, we would greatly appreciate it. Hopefully, you'll subscribe and hit the bell icon to get notified of releases of our content. We try to release everything, or something once a day. So, and we hope you'll come back tomorrow for part 2 of our weekly trading game plan for May 20th through 24th, where again, we'll be taking all these trade ideas and identifying our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. And again, we'll talk about using dividend payers and various option strategies to also generate income, during the return of the meme stocks and what may come. So thank you again and have a great day.